we're talking about tests for understatements. And I was given an example. For example, in testing sales for understatements, signed dispatch notes are traced through to sales in the financial statement to check that the sale was recorded. So here you are testing forward. You are starting at the source and tracing transactions forward to the financial statement. In the other one, the direction of the testing is backward. It's backward. Any questions? Okay. It looks like there are no questions. So let's move on to ISA 530. ISA 530. ISA 530 audit sampling states that the objective of audit sampling is to give the auditor a reasonable basis for its conclusion about the population. So that's very, very important. But however, we all know that there's a risk, right? There's a sampling risk. There's always a risk that the auditor will reach a different conclusion based on the sample than he would have reached had he tested the entire population. This is referred to as what we call sampling risk, which I referred to earlier. There's always a sampling risk, right? So how do you reduce this risk? By ensuring representation. By ensuring representation. The sample you choose must be representative. You must try to make it representative of the entire population. What are some of the factors you consider before selecting a sample? Or selecting a sample size? What do you think are some of the factors you will consider? What will you look out for when selecting a sample size?
Sir, can you look at the riskiness of the transactions that the business undertakes? So if you realize that the business has a lot of risky transactions, then you have to take more sample as compared to a business that has less risk.
Okay, and that's a good point. That's a good point. Okay, that's a good point. So there are several factors that you use to consider when selecting a sample. If an audit sampling exercise is to be effective, the sample must be designed in an appropriate way, right? When you design a sample, the auditor is required to consider the purpose of the audit procedure and the population from which the sample will be drawn. The auditor has to determine the sample size that is sufficient to reduce sampling risk. The auditor must also ensure that each sampling unit has an equal chance to be selected. So there are several things you need to check out for when you are trying to select a sample. The auditor therefore have to make a number of key decisions. Decisions around the sampling approach, the characteristics of the population, the sample selection, etc. Where's my mouse? Now we've talked about, okay, no, not in this class, statistical sampling and non-statistical sampling. Now you can call non-statistical sampling judgmental sampling. Statistical sampling, as the name implies, involves some form of random selection and applies probability. applies probability to the whole sampling approach. But non-statistical sampling is not based on probability theory. Instead, it's based on the judgment of the auditor. So these are methods of sampling. Now, I wouldn't want to bore you with definition for population and all that. But what you need to know is that every individual item in the population is referred to as what's the sampling unit. The sampling unit. The sampling unit. The sampling unit. There are different methods or sample selection methods. We have the random sampling, we have systematic sampling, we have haphazard sampling. These are different ways of sampling. So for random sampling, all items in the population have an equal chance of selection. That's random sampling, right? So maybe you have a population of 10. Random sampling gives every sampling unit an equal representation or an equal chance, of selection. And you have systematic sampling as well. Systematic sampling is basically where a random starting point is chosen from the population. So if you have a population of 100, you choose a random starting point. A random starting point could be number 10, right? Then from there, you say you choose every 10th item. That's also systematic. So you start with a random point. Then items are selected with a standard gap between them. So if you have 1, 2, so how many students are on today? There are 12 students at the moment, right? So if you are doing systematic sampling, you can start at 3. You can start at 3, then you say every second item. Every second item. So 3, you move on to 5, you move on to 7, you move on to 9, you move on to 11. Depending on how you want to do it. If there are 100 people, you can start at 10, then see every 10th item you select. So here I say with systematic sampling, a random starting point is chosen from the population, and then items are selected with a standard gap between them. I hope that makes sense. They also have haphazard sampling. This is where the auditor selects the sample on an arbitrary basis. For example, choosing any 100 invoices from a file. This is not a scientifically valid method and therefore will contain a lot of bias. It is therefore not recommended for use with statistical sampling techniques. Please, do these sampling techniques make sense?
Yes, sir.
Fantastic. Seems we have a lot of slides left. Now, analytical procedures. Analytical procedures, it's always important to remember that analytical procedures helps us to assess whether the reported figures make sense in the context of known business facts. So what do we mean by this? So it helps us to check for anomalies. So let's say you are going through the client's financial statement, and this year revenue was 800,000. But last year you see that revenue was 720 million. Immediately, you know that there's something wrong. And analytical procedures would help to expose that very, very fast. So analytical procedures, according to ISA 520, are evaluations of financial information through analysis of plausible relationships among both financial and non-financial data or data. So here you are looking at ratios, you are looking at trends and relationships. Ouch. Oh, jeez. And all that. So this is where you take into consideration trends and relationship. You compare it to prior year, you compare it to budgets and forecasts, compare it to estimates, industry averages. You know, that's what analytical procedures is all about. Oops. So analytical procedures can be used at three different Analytical procedures can be used at three different stages in the audit process. They must be used in planning. So you can use it in planning. You can use it also as a substantive procedure. And you can use it at the overall review stage. You can use it at the overall review stage. So number one, you can use it in planning. That's the first thing. You can use it in planning. Number two, you can use it, as a substantive procedure. And you can also use it at the overall review stage. I hope that makes sense. Okay, several factors should determine the extent to which the auditor can use analytical procedures as a form of audit evidence. ISA 520 requires the auditor to determine the suitability of particular substantive analytical procedures for given assertions. So here we are looking at what kind of analytical procedure is suitable. What kind of analytical procedure is suitable? For example, there's normally a close relationship between sales commission and sales revenue. Whereas if you do an analysis between administration costs and sales revenue, there's not much of a link or connection between those two. So you need to look at the suitability of so the suitability of such analytical procedure. Please give me a minute. Let me sorry. So we need to determine the suitability of the analytical procedure. We always need to determine the suitability of the analytical procedure. And yeah, I think I don't know if we've talked about this already. Anyway.
We are about to.
Oh, okay. Yeah, so I was saying that what is the extent of use of analytical procedures? You need to determine how suitable the particular analytical procedure you are using is, what to compare it to, whether industry averages, whether prior year information, whether budgets, etc. And also know that the auditor develops an expectation of certain amounts and uses all analytical procedures to kind of like expose that, And analytical procedures also need reliable information, because if the information is wrong, the analysis will definitely be wrong. Analytical procedures helps the auditor to investigate fluctuations. Fluctuations are simply significant changes in a financial ratio or trend compared to previous years. So analytical procedures help to expose that and helps the auditor to investigate those fluctuations. Very, very important. Very, very important. Now, all audit work must be, now let's talk about audit documentation. All audit work must be properly documented and held in the audit file, which is also known as the audit working papers. This documentation provides a record of the audit procedures performed, the audit evidence obtained, and the conclusions that were reached. The documentation will talk about, things like the evidence that the audit was planned and performed in accordance with and all that. So one of the things that is very, very key when it comes to audit is the documentation. The documentation. Has anyone seen an audit working paper before?
No, sir, I haven't.
Okay, if you haven't, just Google one. And you see that the documentation is very, very solid. They talk about the procedures performed. They talk about what kind of evidence they obtain. They talk about their objectives, and they talk about the conclusions reached. So that's what we are talking about here. And the working paper will intend to host all of that. ISA 230, which is centered around audit documentation, always recommends the timely preparation of documentation, right? The documentation must be prepared in a timely manner, and the auditor is required to document discussions that are of significant nature, discuss significant matters. Any inconsistencies, the auditor is supposed to document. Any departure from a basic principle, the auditor is supposed to document. So basically, what was done in the audit has to be documented so that anyone who pays the audit or the audit working paper can tell exactly what was being done. Now, what are the reasons for preparing sufficient and appropriate audit documentation? What are the reasons? It enhances the quality of the audit. It enhances the quality of the audit. And it also promotes the effective review. When you have to review, when there's sufficient documentation, you've told us exactly what you've done, then it helps us to review it. very, very fast, and very, very easily. Very, very important. Other purposes of the audit documentation include the following: assisting the audit team to plan and perform the audit. Think about audit documentation this way, right? Think about audit documentation as a manual. A manual helps you to operate your TV. Your TV manual helps. So the audit documentation has literally everything that was done to audit a particular balance. So you can pick that documentation and actually go through understand the thought process of the auditor and what the auditor was trying to achieve. Now, what is the form, content, and extent of audit documentation? Audit documentation can be recorded on a paper or, in these days, electronic stuff. The audit documentation for a specific engagement is assembled in an audit file, or we call an audit working paper. Here, I said the precise content of the audit working papers varies, and it depends on the nature and the size of the client and the complexity of the audit processes required to reach a conclusion. But it will include stuff like the audit program, letters of confirmation, significant matters. You see, we mentioned significant matters. Correspondence, that is communication between the auditor and a third party or management, whoever it is, correspondence, communication. It will include checklists. It will include analysis. There are two types of audit files. We have the permanent file and we have the current file. The permanent file records information that is likely to be significant to every annual audit of the client. That's why it's called permanent. That's why it's called permanent file. Permanent. That's why it's called permanent, because it's going to be significant for every annual audit. Every annual audit is going to be, so it's called permanent. So examples of such information include a history of the ownership of the business, that's a permanent file. Copies of the financial statements for previous years, that's permanent. They also have what we call current file. The current file contains information of relevance to the current year's audit. Of the current year's audit. Very, very important. So we are looking at we are looking at the current year audit. So what will be an example? Here we are looking at things like audit planning documentation, audit control material, audit letters. All those things are relevant to the current year audit. So that's what we mean by a current year file, or a current file, sorry. It's related to the current year audit. It's related to the current year audit. Any questions on that? Any questions? Any question?
No, sir. I don't
No,
have
sir.
questions.
Okay. Now let's talk about ISA 550, what is related parties. Related parties are individuals, organizations that have an undue influence on the company being audited. You know, examples of related parties include families and all that. We all know about related parties, so I don't want to. Families, you know, I wouldn't want to, but let's look at the impact on the audit of related party relationships. Now, here I say that although many related party transactions are in the normal course of business and therefore may carry no higher a risk of material misstatement than ordinary transactions, in some circumstances, related party transactions may lead to higher risk. So what are some of the examples? What are some of the examples? When related parties operate through complex structures and relationships, you know, it may raise some risk. When there are no effective accounting systems that support related party transactions and balances, there's also a risk there. When related party transactions are not conducted on normal market terms, it also raises some form of could also raise some form of risk, you know. So what are the objectives of the auditor in this regard? The objectives of the auditor with regard to ISA 550 are to obtain an understanding of the entity's related party relationships and transactions. So when you are going into an audit, you need to understand what are the related party relationships and transactions. And then you obtain appropriate evidence concerning those relationships. Oops, I just there. The auditor also has to perform what we call risk assessment procedures when it comes to related party transactions. You must consider the risk of material misstatement due to fraud that arises from, due to fraud that arises from related party transactions. They must also make inquiries. So you see here, you are looking at inquiry is what? It's an audit procedure. You must also understand the internal controls that surround related party transactions. You cannot talk about risk assessment procedures without talking about internal controls. Always remember that the whole purpose and the idea of internal controls is to mitigate risk. Is to mitigate risk. Okay. Now, I wanted to touch on this briefly before we end, which is written representations. Written representation. So what is a written representation? Written representation is governed by ISA 580, which defines a written representation as a written statement by management provided to confirm certain matters or to support other audit evidence. So the auditor must always obtain written representations from management that it has fulfilled its responsibilities in respect of the financial statements of the audit. So you must get a written document for management to say that, we have fulfilled all our responsibilities. It's very, very important. written representations are very, very important. Now let's look at written representations as audit evidence, the written document itself as an audit evidence. If the auditor considers that written representations are needed to support other audit evidence, he must request such other written representations. So during the course of the audit, management will make many representations to the auditor. So you can call it management representations, written representations. You know, and the reason why it is written is because sometimes verbal discussions, you know, you want things to be on paper. Verbal evidence is not strong audit evidence. So the auditor will go a step further to say, you know, give me confirmation in writing. Give me confirmation in writing. You know, and the auditor can use that as evidence to say, hey, you know, you said this. I asked you this and you said this, and then it becomes solid. If it's verbal, the management can say, no, we never said that. We never said that. So written representations is very, very, very important. Very, very important. So in these representations, what does management acknowledge? It acknowledges the fact that it has fulfilled its responsibility for the preparation of the financial statements, and it has provided the auditor with all relevant information. And it also says that, oh, all the transactions recorded and reflected in the financial statements are fine. All transactions have been recorded. So the management is saying that, you know what, we have fulfilled our responsibility. We are supposed to prepare the financial statements. We've done that. We've given the auditor every information, relevant information that they need. We've done that. So who do you think drafts the representation? Who do you think drafts the representation? Who do you think drafts the representation? Okay, so it's the auditor that drafts the representation because he's the one who knows on which areas he requires written representations. You know, if the management decides not to, you know, if management refuses to provide written representation, it's a huge issue, and the matter must be discussed with management. You know, you must discuss, why don't you want to give us written representation? You know, and that will have an impact on the integrity of management as well. Is there something you are hiding? Is there something you are hiding? So this is where we will bring today's lecture to an end. Any questions? If there are no questions, then we'll call it a day. And then I'll post the SCS recordings, these recordings, and the audit lectures on the WhatsApp group. So thank you very much for listening, and have a good weekend. Have a good week, coming week.
Thank you, sir.
Okay. Bye.